We now turn to the southern part of the continent. Investec is a South Africa-based financial services firm. Our very own Jessica Stone sat down with the company's CEO, who says African economies have undergone an amazing transformation over the past 20 years, and it's time for U.S. companies to get in the game.
The world realized that Africa was not only changing, but they looked at the numbers, producing fast growth, a growing middle class, and just joining the global mainstream has allowed or facilitated quite a lot of optimism. I think we're going into a decade of realism now, where it's not, wow, Africa is interesting, you should actually invest. It's now, where do you invest in Africa? And I think that's the difference.
What do you tell your American counterparts about where they should invest? I don't think there's a question of why, but where.
Our view is it's all a bottom-up. It's the business, the industry, and the region. It's not Africa. Africa has 54 countries. Africa has some very small economic units, i.e. small countries where it will be difficult to make the kind of investments that large US investors want to make. So it's in the regions which have rules and the infrastructure to absorb money. And I think there I really want to highlight the good work that East African presidents have done by creating a really efficient economic unit. I think the others, in both SADC and in the ECOWAS, which is West Africa, there is progress, but it's very, very important to provide scale markets to large money or big money investors.
A lot of the private equity world on the continent has been less acquiring companies and more building projects. What are the projects that are most attractive to you, and what is the sort of effective structuring of the financing of these projects that brings enough diversity into it to make sure that it happens?
So the kind of private equity we need to do in Africa is growth private equity. There isn't much to sort of leverage and strip the costs out, except in the sophisticated southern part of the continent in South Africa, where you have very mature companies. So growth private equity and thinking about the evolution of businesses. Now, a great example was the mobile phone industry. They used the public markets to get capital, but they absolutely shot the lights out in terms of growth, and they had to put down a fair amount of risk capital to achieve it. They added the technology. What we do, we will look for companies where we think either family companies or other companies which have operated well over time, in need of some capital and maybe experience of operating cross-border in their regions, and then helping them develop the next step. And in a very interesting success story, which we, along with other investors, including the IFC, have helped develop, is IHS, a towers company, mobile phone towers, the infrastructure for mobile phones. And it was very interesting to see how that business has evolved into a pan-African success story.
Somebody said to me in the course of my reporting that if you can do business in the slums, you'll never go out of business, and that increasingly capital has to move to markets and know-how has to move to markets that don't have everything.
The world, today we live in a world of 7 billion people. 1 billion wealthy, fairly indebted people in what we call the advanced economies. About 5 billion people get up in the morning, and they have been feeling for the last 20 years, with the odd crisis in between, an improvement in their lives. The most best published or explained story is the Chinese story. But there still is 1 billion people around the world who have been excluded. And I think they are the ones where it's really difficult to reach, where business is stretching itself in terms of business model. And I think a lot can be learned from India, and a lot can be learned from Africa, where you can deal with the very poor on a commercial basis. But I think what drives the African change is not that. What drives the African change are those people who got on the bottom end of middle class or employed class or commercial farming rather than peasant farming. And I think that's where the real revolution is now. Next, I think to use Paul Collier's term, the bottom billion needs to be addressed. But I don't think they are changing the game yet.
They're probably the highest risk population to reach with capital and development.
I would say low risk in terms of payback, in terms of willingness to pay back, but difficult in terms of systems, in terms of efficiency. And what's interesting, across Africa, some businesses have really made it their business to deal with a lower end. And I think those models could be exported elsewhere in the world. Insurance, funeral insurance for very poor people, providing them with certain services which they normally don't get in an advanced economy. And I think you will see also, India is very close to Africa. South African and Indian businesses cooperating, or African business and Indian business cooperating to serve that sector profitably.
You've been on the continent for 40 years. I would just ask you, how do you mitigate the risk of investing in a developing market?
I think all investors, professional investors, it's a question of whether you're professional or not. Professional investors do their work to the nth degree and are always extremely risk averse, but are willing to price opportunity and risk in the same equation. And so from our point of view, the way we mitigate is working local partnerships. Include the locals in what you do. In our case, we even run money of local schemes and reinvest them in the areas. Make sure the governments understand what you want to do, and don't try to be the foreign investor who extracts and repatriates profit in a way that was, in a way which is unfriendly to local interests, because that's the quickest way you get into trouble. And your most effective intelligence network is working with the people on the ground and trusting them and employing them.